Ashvin Parekh, Managing Partner of Ashvin Parekh Advisory Services, and Parag Jariwala of Religare Capital Markets join us now. Good morning, gentlemen. Thank you very much for joining us. Mr. Parekh, would this kind of marriage of two large private banks be good only at a price? And is that price, say, a one-time book or 1.5-time book? Anything beyond that would be a wasteful merger?
Well, actually, basically, it's going to be exchange of shares. So therefore, I mean, the same set of, let's say, multiple, of course, looking at the quality of the books and all, will certainly apply. I mean, because you're talking about exchanging paper. But what is interesting about, let's say, this discussion, I mean, if it materializes, if there is any validity, in fact, in the final, if the outcome is a consolidated, let's say, entity, then it should be a very interesting one, almost like in case of life insurance, where two very large players agreed to meet, and the consolidated, let's say, number put them, I mean, in a market share position of almost 1. Something like that is going to happen in banking now. We were talking at length about old private sector banks and, you know, whether someone would really merge them with a larger bank and things like those. But in the private banking space, two very large players, you know, I mean, and consolidated market cap would certainly be, I mean, it will emerge as perhaps India's largest kind of consolidated entity. So it's a different proposition altogether. But to answer your question, it's going to be exchange of paper, I'm sure.
Right. Ashwin, good morning. But you know, a transaction of such magnitude will have lots of headwinds as well, right? I mean, starting with what the senior management might think and a couple of other issues going forward. Do you think this is feasible? You know, of such a kind of merger going through?
Well, it is feasible. I mean, I must say that some of the issues which perhaps, you know, are more, let's say, confronting the public sector banking, particularly the ones associated with the Officers Guild or with the Sub-Staff Guild or whatever, I mean, may not really apply so much. I mean, you know, in case of private banks, I mean, they, of course, they have their unions and things like those. But I suppose more than that, the cultural fit and working together, rather than, let's say, the headwinds arising out of issues on senior management. Culturally, I mean, are these two organizations more or less at par as something, any two, which will really emerge as a final sort of, you know, combination, let's say, constituents. It's going to be really interesting. More than, I suppose, anything else, I suppose the way of working, the risk-taking and the kind of empowerment of the employees will really play a larger part, in fact, in this entire story.
Okay, let's also get our other participant into the conversation. Parag Jariwala joins in. Parag, you know, keeping the merger noise aside for a bit, Axis Bank has been under pressure for very long because of, you know, a higher amount of bad loans and pressure on asset quality, etc. The stock has done nothing for investors over the last 6 to 12 months. Do you see any of this recovery with the merger come through? I mean, will the merger solve any of its key fundamental issues?
Not really, because you know, if you look at Kotak, they are primarily into a retail kind of a market, or probably on the corporate side, what they do is just the working capital loan. And the issues with Axis Bank is quite and totally different. So they have taken exposures to, you know, infra, steel companies on the term loan side. So I don't see any of that problems getting resolved because now the merger is going through. That problem remains, and, you know, probably would be a reason why, you know, probably the merger will not go through.
Okay, actually, that's the point I wanted to ask Mr. Parekh. You have seen the government work, you have seen private banks work. Mr. Kotak is an excellent businessman. I mean, he has pulled off previous mergers. He has built a bank. What's your sense, Mr. Parekh? Will he pull off something big? Will he pull this off?
Well, I mean, if he does, you know, and I mean, I would certainly, I mean, from the industry perspective, more than from the point of view of any respective shareholder, it should be an interesting play, because, I mean, I do find that there are 2 or 3 things which will happen as we go forward. One is capital is becoming a little scarce for banking, and it's come with a huge cost. So, I mean, that's one thing. So, I mean, this merger, and therefore, if there's any room, let's say, for the merged entity to raise more capital and look after, let's say, some of their, let's say, growth and NPA requirements, then it should be an interesting one. But I do take your point that some of these large banks, let's say, for example, in turn, if you look at both the major large ones, they have grown by way of consolidation. I mean, when the licenses were issued in 93, 94 era, from there on, they did merge, I mean, a few banks.
Yep.
So consolidation per se is an interesting way forward. NPAs and all, with the quality management that, let's say, Kotak Mahindra has showed, for example, we could look at maybe a little better answer in the merged entity than we may have in individual boxes at this point in time.
No, but HDFC Bank was what? Lord Krishna Bank, Centurion and Times Bank. Of that, only Centurion was big. But Mr. Kotak has taken Vaishya, which was already big.
I know.
And now Axis would be like huge. So,
Yeah.
I mean, this takes mergers to another level altogether. Well, Parag, I wanted to ask you something else. It's quite clear that there is an appetite for inorganic growth among the big players. Would you therefore play any of the smaller private sector banks as merger targets? Should investors get into that game at all?
See, it becomes tricky, right? Because what we have seen, as you said, basically, in the past, in the history of banking system, only 7 mergers have gone through. And what we have been hearing, a Karnataka bank, I'm hearing for past 5 years, probably, there is a...
I would have said 7 years.
Yeah, so, it becomes very tricky. It is like an event risk you are taking. It may go through, it may not go through. So, probably if there is an independent story except merger, I'll probably choose that story as a play rather than going for a merger-related story. And, large private sector banks getting merged, I don't see Uday Kotak will eventually take a step to buy a bank which is 2.2 times of their own size. It becomes, really a nightmare to consolidate. And as we know, Mr. Parekh said that the cultural issue, who's going to head the retail, who's going to head the treasury. So I would kind of, go with the thesis that eventually, this may not go through at all.
Mr. Parekh, would you agree with that it looks like it's a tough chance of this merger actually going through? And if we do see eventually some sort of a commercial bidding process, how do you think things could play out for Axis? Because then the government is looking at a much better valuation for this deal.
Well, actually, that's where the whole, you touched the real point. Basically, the shareholder objectives will play a larger role over here. I mean, if the shareholders believe that they can really cash out at this point in time, and if they believe that there's a good, let's say, time for them, because even if they get paper in the process, the paper is liquid, so therefore they can really encash at any given stage, of the process. So, I mean, a lot will really depend on the shareholders' objectives. I mean, what exactly are they looking for? And the pricing and everything else will really follow from there, I suppose,
Okay, yep. Yes, I guess pricing will be very important, and other aggressive, big private sector guys are going to make it expensive by the mere fact that they've shown interest. Mr. Parekh and Parag